Good morning, traders. Welcome to Monday of this beautiful week, beautiful month, new February, brand new everything. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to make sure that we know what's going on and when. So taking a look at the news announcements and all that fun stuff. Looking at the news this morning, the only big one that we really have today is going to be at 10 o'clock. That's the ISM manufacturing PMI for January, forecasted at 60. The previous was 60.5. We do also have some minor news announcements and medium news announcements throughout the day, kind of in combination with that. But the big one's going to be at 10 o'clock. We've got some minor news at 9:45, and then a little bit later with the bill auctions at 11:30, 2 o'clock. There's just not much else going on. So 10 o'clock is going to be the big news for today, and that's really about all we have to worry about. So with that out of the way, let's jump into some charts for today. Today being February 1 of 2021. Starting off on the NASDAQ with a pretty funky gap down to start things off. We had a gap down and then it rallied up, and it hasn't stopped rallying up. It's been a pretty aggressive one. But as it stands, this overall movement, we kind of had this descending wedge that really hasn't proven a whole lot. I mean, it really didn't progress very far. Typically, you like wedges to get about 60% of the way. This one barely even made it. But with that weird gap outside of it and just a straight persistent move to the upside, it seems like this gap down was a big opportunity for buyers to buy in, quote unquote, cheap, right? So with that cheap mentality and buying on the dip, if you will, we've now ripped above the highs of the wedge, and this is the area where if buyers are going to take over, they're going to want to see a breakout, pull back, and then get a continuation bounce for more movement up. We do have the potential of resistance quite a bit further up on the NASDAQ, but at 13,430, we've got some intermediary resistance on some of these previous swings along the way. Either way, there's a lot of bullishness coming in, and it's going to be tough for the sellers to push back against the first one if they're going to try to take it back lower. It might take a few times. Over on the S&P with a very similar situation, nice bearish momentum to the downside. They held a beautiful L5 and then rotated down to a new low. We didn't have any weird gapping like down to a new low per se on the S&P, but we did have a downside gap. It quickly filled in, and very similar formation afterward, basically straight up. Sellers will have tried along the way somewhere in the 3700s to 3715s, and, well, they got completely dumped on. There's not even a bounce there. So any sellers who were trying to sell in that area quickly got ran over, and they're going to be looking to jump ship on the return to see if they can get back in long and reverse this back up. Upside objective is going to be in the 3800s. Of course, previous swing highs, 3775s could potentially get in the way as well. But either way, buyers are going to be looking to buy in the dip, and sellers are going to be on a little bit of the back burner this morning. Swinging over to gold and seeing some pretty sideways momentum overall. What a shock. But the big thing, it seems like buyers are really aggressively defending 1835s, and the big zone is the 1830s. And it's interesting because every time the market tries to dip anywhere near there, it just gets screamed out. And the last time it did go underneath it, you saw the response. So buyers are very aggressively buying ahead of this level and disallowing it from coming back any further. So that's going to be the big break point. Buyers are going to be looking to buy that dip. And if they can finally get a pop into those 1830s, that might be the excuse to really load up. But either way, buyers have rising support. We've got a potential flat top to deal with. And it seems like every single low that's coming in, buyers just keep gobbling it right back up again. Then over on crude oil with, well, a monster of a range, very sideways. We do have an L5, which is holding on the base. Realistically, buyers just tried to break out of the highs and failed. So the fact that they failed, we roll back over to a new low. That's expected. This did gap down into the support area, and whenever you gap into a zone of support, it's always a little bit awkward to see what happens. Do the buyers take it? Did the sellers not? You know, it's a really big question here. And, well, it's fairly obvious now that we see the answer. The buyers took it. It's a little bit of a bummer because we didn't come off of the lows of the channel, and there's still plenty of support a bit further down that the market could really utilize as a better bouncing point. But as it stands, buyers are buying that higher low. They're still not allowing the push underneath 5140. And as long as that's the case, well, it's still a range. Buy low, sell high, stay out of the middle. Over on the euro, taking a look at, man, just a monstrous zone of support coming in here, or at least attempting to come in here. We've got a bunch of lower highs grinding down into this area, and it's certainly not helping the buyers trying to defend this zone. But obviously, the low is very well defended, and we're back there again. So the fact that we're right back in this kind of hot spot down here really would show buyers' favor in the sense of a risk-reward standpoint. Buyers are going to be buying down here. maybe that was a Freudian slip, and maybe we shouldn't buy. But buyers will be buying down here, and their stops will be underneath the lows. The big difference, though, is that their targets are way up at the highs. So the reward versus the risk is incredibly high down here, which is what a lot of buyers need in order to get into a trade. We're in a dip territory. We haven't seen any bull bars yet. It's just a big bear bar, but this is a zone where buyers will be looking to try to get this to bounce. Switching gears now over to the cryptocurrency side of things with Bitcoin in this really weird, funky, sideways channel-ish thing going on here. It all started when you measure up the lows, point A to point B, and then trying to find out where that can line up. Putting it on here didn't really work. Putting it on here didn't really work. You can see there's some definitive moves inside there, but nothing that really was that strong until you park it on the highs. And then you see all of that resistance coming in almost to the tick. Then it makes a little more sense. Now we've got a midline inside of there, and we just cycled off of the top. Buyers have been holding some fairly aggressive higher lows. Even on these big dips, it's not making a breakdown. So given that lack of breakdown, buyers are obviously pretty aggressive. They're buying the dips, and that would show up at around 32,000, big psychological level, kind of. 30,000 is a lot more important, but 32, I mean, it might play a part. We've got some decent structure. But aside from that, down here, that's where a lot of the interest starts coming in. So 30,000, it feels like we're just kind of in the middle, and I really don't want to do anything here. I would much rather it be just a bit cheaper. And then finally over on Ethereum with a very nice little wedge formation that is attempting to break down. Typically, the breakout of a wedge, at least the first breakout of the wedge, is a failure, especially when that breakout is relatively weak. So far, this breakout has been kind of strong. It may not look like it, but that breakdown point wasn't joking around. There's no fluctuation. There's no bull bars. It just hit the level and punched a hole through it. So this zone is going to be interesting. Now that we've broken through so aggressively, if we come back, now we're holding it as a potential zone of resistance. Buyers who were trying to buy it for a continuation pop able to get out of break even now. If the buyers can start pressuring through these 1350s and get back above inside the wedge, then we're likely going to charge on up through the highs and maybe target those 1500s, 1600s that we've been waiting for a while. But as it stands, the sellers are trying to get a breakout underneath the wedge low. If it does succeed, buyers' support will be coming in around the 1200s, but we've got a little bit of an interesting spot here. Alrighty, well that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic trading day, and until the next one, we'll see you all then. Thanks.